Wednesday, June 30th, 2021, Monaco 64, home of alternative economics and contrarian views. So today we're going to go over silver and how I believe the silver squeeze movement is far from being over. The movement that started back in February as an outgrowth or outcrop of the Wall Street bets, so to speak. But I think it's more than just that. I think people realize that we have massive inflation coming down the pipe in the future, and people are preparing for it. And it's not the first time. Back in the 60s, the same thing happened. And I'm going to reference a great book that I'm reading right now. I'm almost finished. If you like silver, if you like precious metals, you will love this book. The author, William Silber, he's not a silver bug or a sound money advocate. He's a professor at NYU Business School. But I would say his views are very balanced. He admits silver's manipulated not only on the downside, but on the upside. And you'll be surprised the kind of people that have manipulated silver. It's not just the Hunt brothers. And I'm not going to go through this in this video because I want to cover what I think was like a silver squeeze movement back in the 60s. That led, of course, to the huge bull market of the 70s. So the book is The Story of Silver, how the white metal shaped America and the modern world, by William Silber. Yeah, highly recommended. I think it was published in 2019, so it hasn't been out for that long, but it's a great historical book. And he doesn't talk, of course, about silver squeeze movement, and he doesn't call what happened in the 60s a silver squeeze movement. But I'm going to be very brief here because I don't want to make this video like hours long. Basically, after World War II in 1946, Congress and the administration passed legislation to fix the price of silver at 90.5 cents. Historically, of course, in 1792, the price of silver was set at $1.29. So it's still historically a very low price. And Silber talks about how William Jennings Bryan wanted silver back at $1.29 with gold at $20.67 per ounce, which would be 16 to 1. So silver had been manipulated for ages, of course, but after World War II, that price of 90.5 satisfied the silver states. It satisfied the silver users, the jewelers, the refiners back in the northeast of the United States, the silversmiths. But eventually, with the inflation that came out of World War II, that price became too low, and there was a shortage of silver in the 60s. And JFK, under his administration, was trying to cope with that. The U.S. Treasury was running out of silver. And I'm not going to go through that executive order, quadruple 10, that many people actually erroneously think that it pointed to the fact that JFK wanted to get rid of the Fed. I think it's completely the opposite if you read this book. I'm not going to go through that right now, though, but I'm going to go through now the section where he talks about what was happening in 63. And I think it was similar to a silver squeeze movement. So it says here on page 120, Treasury Secretary Douglas Dillon had testified in the Senate on April 29, 1963, that passing JFK's legislation authorizing the Federal Reserve to print $1 bills would assure the adequate supply of silver to meet our coinage needs for the next 10 to 20 years. So yes, he thought that would decrease the demand for silver coinage, right? Less than a year later, on Monday, March 23rd, 1964, a crowd of more than 1,000 people ignored Dillon's prediction and surrounded the historic U.S. Treasury building in Washington, D.C. like it was a Macy's on Black Friday, waiting to buy silver dollars. Few Americans used the bulky coins in daily life, but they had been last minted in 1935, and the growing population of numismatists found them irresistible. According to Franklin R. Burns, sales manager for coin and stamp collecting at the Woodward and Lothrop department store in Chevy Chase, Maryland, people are just hoping they will come across some silver dollars with rare dates or rare mints. For instance, one of the 756,000 silver dollars minted in 1879 in Carson City, Nevada, would bring a good price. One dealer said he would pay from $40 to $70 for an 1875 Carson City, which was uncirculated. America's obsession with coin collecting rivaled the craze for a new music group, the Beatles, who had arrived in America a month earlier. So it's not just about numismatics, because as he says here on page 122, the price of silver would have to go above 138 and a quarter per ounce to make circulating dimes, quarters, and halves worth melting for their bullion value. But that was only 7% away, and until then, budding numismatists could enjoy their new hobby. Coin collectors also searched for nickels minted between 1942 and 45, when silver replaced the coin's nickel content, which was used in armor plating for combat vehicles. Those wartime nickels had a little more than 0.05 ounces of silver, making them worth more than 7 cents at the current price of $1.293 per ounce. Coin collectors had become closet silver speculators, and the current profits were just an appetizer before the anticipated feast if silver exceeded $1.38. It was as though Americans had heard the opening bell at COMEX, signaling a new beginning for the white metal as a hard asset. So there you go. That's where I think we are. We're in the beginning of this movement. It's more than just numismatics, of course. Is that Americans, and this time I think the whole world, people are realizing that silver is a hard asset. So now I'm going to skip to page 157, where he's talking about Nelson Bunker Hunt, who is just starting to get involved into silver. And it says the beginning of 1970 was a bad time to start accumulating silver. The price of the white metal had declined from its peak of $2.50 per ounce in June 1968, when the Treasury ended the redemption rights of silver certificates, to $1.80 per ounce as the new decade began. And $2.50 doesn't seem much, but considering that silver was at 90.5 cents up until 1963, that is a big move, and would continue to erode for 2 years to a low of $1.28, a decline of almost 50% from its previous high. So $1.28, that's really interesting, that level there, because the key level for silver really that people looked at was 1.293, which was the level set through the Constitution, through the Act of 1792. Yes, there was a rebalancing of the gold to silver ratio. I think it was later on after 1792. But yeah, that level 1.293 was really important for silver. And it's interesting that it broke through that level with the heavy demand for silver that started out with the general public in the 60s, broke through that level and went all the way to $2.50. And then it came back down to retest that 129, went to 128. And of course, silver went on to trade at $50 almost in 1980. So am I saying it's going to take another 10 years for silver to really truly discover its real non-manipulated price? I don't know, but I think this is nothing new that's happening here. We have people, the general public, not only in the US, but all around the world, realizing that there's going to be massive price rises because we've had massive inflation, especially in the last 18 months or so. And not only that, but we've had massive inflation since the monetary system was taken off any kind of precious metals anchor back in 1971. So yeah, it's interesting how history does not repeat itself exactly, but it rhymes. So I highly recommend this book. I'll probably finish this book before the end of the week. It's really hard to put it down if you're into this kind of subject of silver, and I'm sure many of you are. So now let's quickly look at where the markets are. It's 10 past 8 a.m. London time. We've got spot gold at $17.59. It's down a couple of dollars. The range has been $17.55 to $17.65. Am I concerned about gold and silver? No. I'm in it for the long haul. I know there's no way out of this inflation. And despite what you hear from the mainstream economists, from the central banks, yeah, don't be fooled. They can't stop inflating. Silver, 25.80, up 5 cents. Range has been 25.90 to 25.72. The Dow futures up 20, S&P futures up 3, NASDAQ 100 futures up 14. The currencies, sterling is down slightly at 138.26. The euro is unchanged at 119. The dollar is unchanged versus the yen at 110.52. The dollar is slightly lower versus the yuan at 6.46. And the Aussie dollar this morning is 75.17. So that's unchanged overnight, the Aussie dollar, but still relatively weak right now. We've got crude oil up 1/3% at 73.02. That's WTI crude. High-grade copper is up 1/3% at 427.70. And the 10-year yield is at 148. That's unchanged. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.